Saturday, June 28th, 12:32 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We're nearing the end of the month. This coming Monday is the last trading day of the month. That will be ending halfway through the year into earnings starting July. So that means halfway through the quarters. 2 quarters will be completed. And next month, companies will be reporting their earnings. That would be public information available from the SEC.gov. As well, you can see what institutions are companies that manage other people's money, mutual funds, hedge funds, pension funds, and others. Everything they bought, acquired, or sold in stocks, assets, is public information. It's available for free on the SEC.gov. Yep, that's a lot of good insight available there, especially if you're looking at some of the huge companies, or if you look at individuals like, say, Berkshire Hathaway. Yep. What else? Well, next week is a U.S. holiday, Independence Day. The markets are closed. That's Friday. We also have Congress working on a bill, pushing it along and revising it several times. The one big, beautiful bill. And there's consequences on any tax lines they add in there. Specifically, currently there's a line to add a certain tax of tariffs, aka tariffs, tax, same thing, on imports. And that would most likely cause those other nations to do it back to us. That would have a big impact. Reason to put that tax on the current administration, they want to bring in tax revenue for their increased spending. Well, that will have an impact. And we'll find out soon if that's going to muster and get approval through Congress. Also, July 9th is a tariff that's going into effect unless otherwise changed. That will have a huge also impact. That's part of the steel imports, aluminum. You can read more of that on your own. But since we're coming into the end of the month, we're going to look at the stock indexes and stock sectors, see who made new high currently for the year to date. Cash index, S&P 500, the go-to stock index that institutions and more the wiser individuals compare their performance with if they're in stocks. Remember, there are other financial assets that are not stocks. You don't compare them with this. They're not weighted the same. What am I meaning? Currency indexes, bond indexes, commodity indexes. Sure, you want to be in the one that's the winner, but they're not the same underlying. So again, if you have currency indexes, commodity indexes, crypto indexes, yield indexes, if they're performing better, which some of them are, you should have been in those already. So the S&P 500, all-time new high this month, year to date. All-time high. Nice. But we're going to break this down because the S&P 500 has several indexes that make it up. So we'll see which index is performing better or worse. That's hurting this, as well as the 11 sectors in it. NASDAQ 100. This is part of the S&P 500. All-time new high. Again, this is the NASDAQ 100, not the NASDAQ composite. They're two different things. Dow Jones Industrial Average. Look at this yellow horizontal line. It has not even broke the high of last year yet. This index is part of the S&P 500 and it's struggling. 30 of the largest publicly traded companies in the United States. Very diversified index. It's underperforming. The first two I showed you. The Dow Transport's underperforming since 2021. Dow Jones Utilities also underperforming last year's high. Russell 2000, not part of the S&P 500. It's also underperforming, still below 2024. So there you got it. Only 2 indexes, all-time new highs, and those all-time new highs just occurred the past few days. So again, this S&P 500 is comprised of several of these indexes, as well as what I don't have on here. The S&P 100 is inside the S&P 500. Let's go on to the sectors now. The 11 sectors, we'll go in order. And we'll also look at a month candle bar, again, which will be completed Monday. Currently, the largest weighted sector in the S&P 500 is technology. These are stock ETFs. You can trade them. Look at that, all-time new high. Which, if you look at the video I showed a few days ago, you can see the Magnificent Seven and see how those are performing. Quite a few of those are what? Still below the highs of last year, underperforming. Healthcare. Look at that, way below the highs of 2024. Not good. Inside candle for the month, down here struggling. And financials, still below the highs of this year. Those first three sectors I just showed you are the largest weighted sectors in the S&P 500. Big impact they have when they're down. Consumer treasury at below the highs 2024. Communication services, new high for the year. It's just as up. Industrial, new high for the year. Consumer staple, inside candle for the month, below the highs of last year. Again, this is very important for the economy. So when this is struggling, it's showing it's not a healthy market when it's not all-time new high compared to the others. Consumer staple. You can see on your own, there's several sectors in here to define what those sectors. Sorry, there's several industries within each sector. Energy, way below the highs, even from 2014. And utilities, below the highs of last year. Real estate, yep, way below the highs of 2021. And look at here, still below the highs of this year. Basic materials, below the highs of last year. Yep, this is important too for the economy. You see, they're struggling. So there you go. See, across the board, the sectors, the indexes, majority of them are struggling. That just shows that majority of the money going into the market is in less and less companies. There are less and less going to have the majority of the money going there. And when those sell off, if that money that sells off leaves the stock market and goes to currencies, bonds, commodities, we know the market falls faster than it climbs up. Nothing wrong with taking profits anytime soon. So if you're a long-term investor, there's more than just stocks. You see those on my other videos. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.